Welcome back. Let's catch you up on a few headlines that should be on your radar. It is time for Rapid Fire, and here to break the stories down for us, Dominic Chu, Courtney Reagan, and Dominic Chu. First up, major trading news today. If you're wondering why this market's down so much, yes, it's the ISM report, but there are some major players getting hit today. Check out what's going on. Charles Schwab is getting rid of trading commissions altogether for U.S. stocks, ETFs, and options starting next week. Great for users. Previously, they had cost $4.95 each on the platform, but take a look at what investors think about this news today. Shares of Schwab are on track to post their worst day since June of 2016. They're now down more than 10%. TD Ameritrade is down 24% on this news for its worst day in 13 years, Dom.
I mean, so the writing's been on the wall for this for decades now. I mean, I remember when it was a big deal when trades went to like $50 a trade, down to $29.95 a trade, down to $9.95 a trade, and down to $4.95. Led lower by Charles Schwab. Yeah. And then there was another big deal when Fidelity started offering ETFs with zero trading commissions and then zero fees to manage the money. The spread compression trade has been happening for years.
And Interactive Brokers has played a big role in this, too.
IBKR Lite announced that platform for $1 trades just in the last couple of weeks. So this whole thing has been going this way for a while. What it does, though, is beg the question about whether or not these people can continue to make money. And I will tell you, yes, they can, because they will find other ways to do it. And I'm not going to get into the weeds about this, but
Schwab,
there are other ways.
for instance, has a bank. I mean, which is why they also get hit on the sort of low interest rate stories. But that's why there's a differentiation between their business model and some of the others who are seen as more pure
play. They have about $4 trillion in assets under management right there. There's a money-making operation.
Well, and the last time that they cut their fees, I think they grew the assets under management by $80 billion, if I did the math right. I mean, that's a lot of money.
They're counting on even more money coming in the front door as a result of this change, and I wouldn't be surprised if that happens.
They even manage their own ETFs, by the way.
But
they have a slew of different exchange-traded funds that they actually manage and collect fees on themselves.
Great point. And they're all going to be looking, like you said, for different business models. But the stock price action tells you these investors don't think Schwab's going to be the only one doing this. Their first mover advantage is going to be very, very small if everybody else has to do the same thing and follow them down in the race to zero.
You have to have a business model that can withstand this. Now, Schwab says that they will lose about, 3% in net revenue as a result of this move, which I'm guessing they're thinking they're going to make up on the other side, on the asset side. So the competitors need to have those kinds of assets. Now, I don't know what TD Ameritrade and E-Trade have in terms of assets under management, but
you can
clearly the market thinks they're being hit harder by this whole thing.
You can tell by the stock reactions in E-Trade Financial and TD Ameritrade where these stocks are more dependent on. TD Ameritrade and E-Trade Financial are more dependent on those retail brokerage commissions as opposed to Schwab. So they're getting hit harder on this than Schwab is. And like you said, Schwab has a robust business for asset management. They also have one of the biggest retail platforms for registered investment advisors. So advisors who place their money for custody and services at Schwab and then manage through those platforms.
Yeah, watch this space. It's fee compression everywhere in the financial industry. We'll see how they all
for investors.
Next.
Yeah,
great for investors.
Right?
Sure. Great for trading. Up next, will malls bail out bankrupt retailers? Forever 21's largest landlords, Simon Property Group and Brookfield Property Partners, were reportedly in talks to help keep Forever 21 afloat, but the talks broke down. Simon is owed about $8 million. Brookfield about $5 million. Forever 21 is more than 2% of Brookfield's minimum rents. Courtney, we actually have seen this before, where a mall operator, Simon, teamed up with GGP,
which is now owned by Brookfield,
with Aeropostal's bankruptcy.
Exactly, and that was in 2016. And then on the most recent earnings call with Simon Property Group, CEO David Simon did address this because many people thought that Forever 21 was perhaps on the brink of bankruptcy at that point. And we know that they're a big tenant for Simon. And what David Simon basically said is, look, it worked out great for us. He said we made a ton of money in Aeropostal. We will look into doing other deals. We'll work on other distressed situations, but we're only going to buy companies that we think have brands and that have volume that's worth doing. So what's very interesting about Forever 21 is in many cases
one of those brands.
It could be, especially because of the size of the store. So if an average store is 40,000 square feet, the bigger ones are 100,000. And ironically, some of these Forever 21s had taken over old department store spaces shortly after the financial crisis. So it's a pretty big deal, but they didn't give away any of their hand if they were really looking at Forever 21 at that point.
I just wonder what the future of malls are overall.
Sure,
are they going to end
all
up?
Do.
Will they end up owning more of their own retailers as part of this whole deal, rather than just being, tenants, relationship?
It's certainly very possible, and then they would have a lot more control. I think some of these co-tenancy clauses, too, cause some fear and ripple effects, because if you lose a really big tenant, whether it's a department store or a very large Forever 21 space, you could then lose other tenants, and that gets very quickly out of hand, and your vacancy goes higher. But that's a very interesting thought.
Last final quick word on this. So is it over, you think, or no? Do you think when they say, look, these talks have fallen apart, does that mean that's
No, look,
it?
I don't have any of my own reporting on these talks specifically, but I think that it's never really over. And I think as the bankruptcy days and clock starts ticking in court, sometimes that price actually gets lower if there aren't that many bidders.
True.
So it's possible that they could just be waiting and see what happens at the very end.
Yeah, because they have so much skin in this game, as you said. All right.
For sure.
Facebook, meanwhile, a lot of headlines here today, taking on regulators and taking on Elizabeth Warren. First, the Washington Post detailing how the company geared up for its fight with the FTC, which resulted in that record $5 billion fine. The Post reporting the company thinks it would have prevailed in court had it come to that. And now leaked audio from an internal meeting shows CEO Mark Zuckerberg's confidence on that and when it comes to Senator Warren's call to break up big tech. Listen.
Like Elizabeth Warren, who thinks that the right answer is to break up the companies, if she gets elected president, then I would bet that we will have a legal challenge, and I would bet that we will win the legal challenge. Does that still suck for us? Yeah.
Warren fired back in a tweet saying what would really, quote unquote, suck is if we don't fix a corrupt system that lets giant companies like Facebook engage in illegal anti-competitive practices and so on and so forth.
First of all, he's a human being.
He sounds like
he
one.
Sounds like
Who
a human.
knew?
He's not the robot that we so often see in public here. So that's refreshing to hear.
I would say this. I would say, and folks who watch this program know I'm not the biggest fan of online data and privacy sharing, that sort of thing. I have real reservations about it. But it made me feel good to hear Mark Zuckerberg talk like a coach in the locker room if you know that your team is down 3 touchdowns at halftime. I mean, this is the kind of speech you should be giving as a CEO, founder of a company, if your company is being assailed from the outside.
Right, but is it the wrong speech if you're a concerned consumer who wants to hear them say, well, we have to fix, here's how we're going to fix our practices, and here's some, you know what I'm saying? Like, instead he seemed to say, we're going to win, we're not doing anything wrong, we're going to rally the troops.
But if they really believe that they're not doing anything wrong, then that is the speech that you should be giving. Telling employees, hey, listen, we've got a real problem on our hands. Let's go out there and let's try to do this. Let's fix this. Let's win this game. I understand why Elizabeth Warren is saying what she is, because they have a very valid concern. I share those concerns.
Right.
But Mark Zuckerberg is doing, from a leadership standpoint, what a lot of people say he should be doing.
Ironically,
which is to take a lead on the stand.
Yes, but I heard Jim Cramer, when he was talking about this earlier today, was joking, please break up these companies, because the returns for the last 52 weeks have actually been, they're all trading below their all-time highs. Sure, it's been a great year to date. Facebook's down 15% from its all-time high.
I'm not sure that's as a result of bad business. I think it's just the regulatory haze that's formed over these companies and the fear that these regulations are going to come to fruition. Now, I've been saying, given all of these investigations and everything that's coming at them, walking away with just a fine of some kind is not going to be acceptable. They're going to have to give a pound of flesh at some time. I know they're saying it's not going to happen. He called this an existential move on Elizabeth Warren's part to call for the breakup of the company. But I think there's going to have to be some sort of divestiture at some point by Facebook.
I think it's good at least that they're addressing it and thinking about a possible playbook if this is eventually what happens. I think if you're an investor, it's good that he doesn't have his head in the sand, right? Yeah. That he's thinking about this as a real possibility.
Well, sure. I mean, I'd still like to hear more about why they think they would prevail in court. And
what do you expect him to say?
Well, no, but the company
we hope we don't have to go to court because we probably won't win.
To the Post's point of this is something they really thought, okay, we'll fight this, here's our plan, and so forth, but we will win in court. And that I find fascinating. All right, got to go. Guys, thank you all. Appreciate it today. Dominic Chu, Courtney Reagan, Bill Griffin.